Chapter 6, Developing a Compensation Program. We've figured out what type of organization we have up to this point. We developed a job description, we developed interview questions, we came up with a training protocol, we hired the person, we trained them, subsequently dealt with any improvement issues that we needed to, and the last piece we need to do is develop a compensation program so that we can appropriately pay the individuals that we've hired. Unfortunately, most of us aren't going to end up being a Jillian Michaels, especially right off the bat, and earning a multi-million-dollar salary to do the things that we do. And often we get into this industry because we like to work out. But we have to keep in mind that health and fitness is a customer service driven industry. It's about the customer's workout, not our workout. And our businesses cannot survive without highly motivated employees. And in order to attract and retain these employees, we need a well-designed and properly implemented compensation plan. Compensation can reward employees for their productivity. It contributes to the success of our operation. And our management style is reflected in our method of compensation. Compensation is part of management. The management style must be reflected in the method of compensation. A well-developed compensation plan, so how you're going to pay these individuals, is first of all a simple plan and design. It's adapted to the management style. If it's well developed, it can set you apart from the competition. It can assist in recruiting new employees. It can certainly help retain existing personnel. And it can contribute significantly to employee morale. When I was at the Parks, Rec, and Forestry Department, we tended to have a higher base wage for our fitness professionals than most of the for-profit entities around us. I didn't have a gym or special things that I could offer the staff, so I wanted to make sure that I rewarded them by their hourly wage. I also made sure to include some time for prep, class prep, which you don't always get at a lot of the facilities. But this is how I was trying to set myself apart from competition and assist in the recruiting and the retaining of the personnel. A higher base wage, and for an hour class, you would get a quarter to a half hour a week for preparatory time for that class. So it adds up in the long run because you're going to do that prep time. It's just nice when you get compensated for it. The book suggests 5 compensation strategies, and basically create a plan that contributes to the success of the operation, and it's also supported by your employees. Compensation is competitive, and we have to think about figuring out what is paid for similar positions in the field. You certainly can look at industry surveys for national salaries, but one of the things that I've had you do is a compensation survey where we have just contacted local fitness organizations, health and wellness organizations, and inquired about the rate of pay and what goes along with their compensation packages. I would do this yearly for the positions that I had at the Parks, Rec, and Forestry Department. We also have to recognize that employees are income-producing assets. So our employees are a major contributor to the overall success of our organization. And because health and wellness, it's not tangible. All these employees, they contribute to this in some way or shape or another. So keep in mind, if you have a really good personal trainer, you have a really good group exercise instructor, people are going to stay at your facility and continue to pay their membership fees, their program fees, because you have a great employee, and we have to keep that in mind when developing a compensation plan. We also have to think about balancing payroll costs with employee productivity. And we rarely focus on the income-producing potential of our employees, like we mentioned previously. And this is just not something we do. We look at, okay, we're cutting payroll because it's such a big expense. It is a very big expense. 35% of our total expense is usually at our facility. But we forget, again, that we have to balance it with employee productivity. Our highly productive individuals cost us much less, so to speak, than we're putting out in our payroll. And we always do this thing of just kind of trying to manage the payroll cost. And it's not just the salaries, the benefits, the taxes. That's 35% of our total expenses typically at a commercial fitness center. We want to think about turnover. If we have to go and replace this employee, how expensive that can be. So if we can really think about weighing the impact of payroll costs against the financial results of business, that could help us in this situation. We also have to consider that this is a cost as an investment in the future. And again, this is one of their compensation suggestions, to think about it in this way. It's an investment rather than an expense in terms of doing your business. Once management views are developed, we have to establish policies that reflect the views of our organization. We have to keep in mind that all personnel should be treated fairly and consistently. Even though they might have different positions, they have to be treated fairly and consistently. And management needs to be accountable to employees. And when you think about being accountable, you have to have the authority to act if needed. When it comes down to pay, it's definitely a personal matter, but you have the obligation as a manager to justify, report, or explain any issues related to compensation. So you have to have the ability to be accountable, to have the authority to act if needed when it comes to this payroll issues. When it comes to your compensation policies, things that you want to address in your policies: what should the pay be for jobs compared with similar positions in the field? We talked about that, doing that survey to figure out what comparable positions are being paid. What is the policy with respect for pay for performance? So in terms of if they're putting out more for you, they're selling more as a personal trainer, they're bringing in, are they going to get a higher cut of that personal training package? Is there a standard policy for performance review pay adjustments? So if you meet a certain level on that performance review, you automatically get a 1% increase, 2% increase, 25 cents. What is the policy related to that? You need to figure out if your organization is going to provide health and retirement plans. If so, what's going to be the employee's contribution? What will be the compensation policy differences for full-time, part-time, and independent contractors? In some places, an independent contractor is not going to get a membership. They're simply there for to perform the services. That's it. A full-time employee may get their membership paid for. Maybe they get to have programs free. Part-time employee may have to work so many hours in order to get any of these pieces. Keeping in mind, as a form of compensation, can employees use the facility free of charge? If so, when? Are there any limits on that? And then you have to figure out which positions will be designated salary, hourly wage, commission, or payment per class. And oftentimes there's some specific designations that go along with making those determinations. Before we develop our compensation plan, we want to make a list of every employee position. We need to know how many employees we have and what positions. We need to group them into various divisions. What's our upper management and our supervisors? Oftentimes they're on salary. Many of our full-time staff will be on salary. Any full-time staff that might be on hourly, there's not always a lot of that. Part-time staff tends to be on hourly, and any outside contractors that we may have. Different job categories may require different pay programs and practices, and that's something to keep in mind, and is a practical expectation that a part-time person may not receive the same level of benefits as a full-time staff person. And then we have to go through the process for developing a compensation program. First step in the process, we have to perform a needs analysis. So in doing our needs analysis, we are going to hold a discussion with our department heads, our department supervisors. We're going to hold discussions with our employees. We're going to examine reported issues, both staff and member related. And we're going to perform personnel audits for the various positions. And we need to kind of identify the needs that is most critical in the aspect of compensation. So we're going to perform our needs analysis for the first piece. Next, we're going to develop objectives. So we're going to set specific goals, and we are going to consider the impact on all phases of the operation. We want to consider the schedule, how we format classes or how we format personal training sessions. And we have to determine if there are enough staff available to meet the goals that we have. Sometimes we have these really lofty goals, and then we really have to evaluate the cost of those goals, and do we have the personnel to meet those goals. Remember, we want to be effective and efficient as managers. And then after we do this, we're going to construct the program. So we have to align the program to fit the way that the business is managed. We have to keep in mind we have to make our program flexible. We have to keep the program simple. And we have to have a way of measuring results. We don't want to make compensation a bad word. This is something that happens in the industry, and I think it happens across the board. When you start talking about compensation, people start to think about, our wages are going to be frozen. They're going to make us pay more for our benefits. So we want to construct this program trying to stay as positive as we possibly can. Then the book talks about testing the program. Before we really put it into play, we want to test the program. We want to consider legal, tax, and accounting ramifications. We want to play devil's advocate and consider the what-if possibilities. We want to determine whether or not our program is going to stand the test of time. And we want to compare our program against alternatives, other things that might be out there. We want to question each aspect of the plan, decide on any changes before we actually implement the plan. So this is our fourth step. We test the program before we implement the program. So next we would implement the program. So we're putting the program into operation. We're establishing the various procedures and reviews necessary that we do with any new program. And we have an ongoing application of this program to see if it's achieving the original goals established by, again, our management, our employees, our business practices. This phase basically never ends. We're implementing that program, but then we come back to piece number 6, which is we evaluate the program's effectiveness. We have to review and revise the program, and then we have to think about the testing and really implementing the program. That implementing is an ongoing, and evaluation you'll find is often ongoing. Anytime programs, operations, compensation, evaluation tends to be an ongoing process as well. And then we also want to review the program when we need to. So times in which we want to review the program or we need to make revisions might be when we have a change in operations, we have changes in payroll regulations, changes in financial status, or changes in our management. Now remember, there's lots of forms of compensation. Hopefully in doing your compensation survey, you were able to determine that. Forms of compensation could include wages and salaries, overtime pay, commissions, bonuses and profit sharing, performance-based pay, pay for time not worked, benefits, and then any non-financial rewards that we may have. Obviously, a wage is payment for the employee rendering services. It's done on an hourly or daily basis. A salary is the compensation that's paid weekly, semi-monthly, monthly. It's a set sum. Oftentimes with wages, it's related to actually working the hours. Overtime pay. By law, certain employees must be paid time and a half for each hour worked in excess of 40 a week. And this really depends on the type of employee that it is. And if you're employing minors, minors are always entitled to overtime, and there's a lot of restrictions when it comes to employing minors and making sure that you're not violating any child labor laws. Sometimes when you think about this, is it cost effective to stay open on a holiday? Do you offer classes on a holiday? Sometimes you would have to pay. Because it's a holiday, you might have to pay someone overtime or double time or time and a half. It might be something to think about when you're trying to decide whether or not you should stay open or offer anything special on holidays. commissions. Commissions, so it's basically an employee receives a percentage of what they obtained in total sales. The average that they've listed here in the book is 49.3%, which I would say is fairly low. I would say 50% in many of our commissioned employees is at least the standard. Oftentimes you're going to see 60-30, that they'll receive 70% of what was brought in, 60% of what was brought in. The thing with commissions is that it can be kind of a challenging aspect because it might cause our staff to sell more aggressively. It generates sometimes an unfavorable member reaction that they feel like, oh, this person's just always trying to sell me something. But it also can help hold some of our staff accountable. Remember, if we're paying them for productivity, they're going to be productive if they know they get a percentage of the income that was brought in. And this is a way that they often pay a lot of our specialty employees in the industry. So sales personnel, massage therapists, personal trainers, tennis pros. Those are some of the employees that might be getting commission-based pay. The book also talks about bonuses and profit sharing. This is really going to be dependent on the type of organization that you have. 70% of clubs report some form of bonus plan, and this is from IRSA 2006 survey. But again, it doesn't necessarily indicate what type of clubs we're looking at for this. The bonuses and profit sharing, oftentimes if you're in a nonprofit organization, a hospital-based organization, one of the government-based organizations, bonuses and profit sharing is not an option that you're going to have there. There's usually some type of agreement at hire and a written contract related to bonuses and profit sharing when it comes to that. Performance-based pay. So the logic behind performance-based pay is that improved performance should result in greater employee productivity, which should in turn result in improved business for you. The financial return here, you might get a higher financial return. You have to kind of consider this to be investment spending. You're investing in this. The disadvantages for this is that it's related to accountability. The measurements used for identifying performance improvements are not precise, and they're rarely easy to assess from day to day. So in this type of performance-based pay, supervisors must establish some type of tangible goals that they can measure, at least monthly, related to this. So possible goals may include an increase in monthly fitness revenue by 3%, or a decrease in expenses by 2%, or an increase in the annual participation rate for fitness programs by 5%. Once the managers determine the goals, they must decide how each employee contributes to achieving these goals. Another problem associated with pay for performance compensation is in the merit approach to productivity. Personal traits may be deemed as meriting to a pay increase. However, they may have no impact on the work effectiveness. So this is definitely a challenging way to compensate your staff, your employees. Pay for time not worked. So this is when people start thinking about benefits. So vacation time, holidays, sick leave days, special time off due to jury duty, military service. This is awesome for many of us in this industry. We know that this isn't something that happens. Most of us are hourly or commissioned, and so if we don't work, we don't get paid. So if for employees to have an opportunity to have paid time off is awesome, and we all need a break from work, and it's nice to be able to have a break and not necessarily have to worry about then having enough income to pay all of your bills. So this is a great form of compensation, a great benefit. Benefits. It talks a little bit about benefits in the book, but benefits can include insurance, such as health, disability, death benefits. There might be some type of retirement plan that is considered as part of the benefits. As an employee, then the facility that's employing you, you're paying their taxes in terms of, their FICA, their Social Security tax, their workers' comp insurance, some of the state and federal, you're paying a percentage of it. So this can be very helpful, whereas a commissioned employee, or I should say a contracted employee, may have to come up with those tax payments on their own. And one of the things in this industry or in any position is you really want to look at is the non-financial rewards or forms of compensation. So yes, you definitely have the feel-good sense of helping people become more fit or reaching their goals or seeing great improvements mentally, physically, spiritually, whatever it may be. But the non-financial rewards, I think, are often why many of us who work part-time in the industry stay with it. So lots of times we'll be able to use the club facilities free of charge. When you think about that, like at the Princeton Club, I receive a free membership for being an employee there. A membership can run you $50 a month for an individual. We heard that from some of the places that we've been at. So if you think about that over the course of the year, you're already saving yourself several $100s. We also get club discounts. So we can have free tanning, we can have free towel service, things that you're going to have to pay for as a general member. Child care, many places do include the child care, but you also heard some of the visits that we've made so far, you do have to pay for it, but they'll allow the employees to have child care free of charge. Some places will also pay your royalties to be part of certain programs. Many group exercise modalities require a monthly fee to be paid to the organization that puts out that certification, such as Zumba, Insanity, any of the Les Mills programs. So if your club is willing to pay those monthly royalties, how it can add up. For example, Zumba would pay $30 a month. Insanity, they can pay $30 to $60, the Beachbody set, per month to be able to teach those modalities. Les Mills runs about $300 per quarter. So which basically breaks down to about $75 a month to be part of that system. So if your employer is willing to pay for that, that certainly can help keep you there and keep you going in it. Some of them also do continuing education assistance. With many of our certifications, such as the ones through American Council on Exercise, you do have to get continuing education credits, and you have to do that either yearly, every 2 years, maybe every 3, depending on the certification that you have. The Princeton Club will give us $250 per year towards this. That is very helpful in the scheme of things when you're looking at it. So we do have to look at those non-financial rewards when it comes to are they also going to give you your uniform, or are you going to have to pay for your uniform? Even though that might seem very minimal, it can add up over time. So you have to think of the other forms of compensation that may be out there, the non-financial rewards. In terms of pay practices in our industry, we have our salaried and then our hourly individuals. So salaried individuals tend to be those in which the input and decision making, they tend to be the higher level, the ownership group, the manager, the sales director, the membership director, fitness director, the higher ups. So their input is substantial to the success of the business. Our hourly wage folks tend to be our service desk, our personal trainers, potentially, maybe they're more so commission-based, childcare staff, maybe our restaurant staff, pro shop employees, housekeeping, or some type of operational personnel. Those tend to be our hourly wage staff. Now, when it comes to this, then there's a further categorization of this. You have the exempt versus your non-exempt employees. Our exempt employees, they receive a salary, and they are not normally eligible for overtime. Our non-exempt employees are individually paid hourly wage. They're individuals paid hourly wages for providing services. They're almost always eligible for overtime. Historically in our industry, we have tried to create exempt positions in an attempt to avoid paying overtime, but there are some things that you have to keep in mind in terms of being an exempt or non-exempt employee. An exempt employee must supervise 2 or more employees. They must allocate 50% of their job responsibilities to supervision. And a commissioned employee can be exempt if a significant portion of their earnings is commission-based. So you have to keep that in mind. If 50% of their job responsibilities is supervision, that other 50% would have to be, if it was commission-based, it would have to be pretty substantial, pretty much the rest of their time in order to meet that exempt status. The non-exempt status, usually no supervisory responsibility or less than 2. Supervision is less than 50% of the job responsibilities, and more dependent upon a fixed hourly rate of pay for compensation. Now again, we talked about that non-exempt employees are almost always eligible for overtime. I ran a pool and I also ran some seasonal facilities. As a seasonal facility, things are a little bit different. And although they might be an hourly worker, I was not obligated to pay overtime for many of those individuals because I'm a seasonal facility in which I'm open 90 days or less. I have a real target focus for when I'm available, when I'm open, and we have to run extensive hours during that time. So you'd have to just check, depending on your facility and what you're doing, for some of those, exemptions to the exempt, non-exempt rule. Finally, we want to talk about contractor compensation, because I think this is one that often gets very confused in our industry. A contractor is hired for a specific time or task. Group exercise instructors, personal trainers, they can be a contracted individual. The thing is, with a contracted individual, we tend to treat them oftentimes as an employee, and we can't treat them as an employee if they're an independent contractor. A benefit to our operation to have an independent contractor is that they're not covered by group benefits or retirement plan. They have to provide their own liability insurance. They don't get the free membership. They don't get the towel service. They don't get the extra child care because it's a contracted position. Now, if an attempt to pay as an independent contractor, but they're treated like employees, the employer can be subject to significant fines. And when you think about contractor versus an employee, these are some of the things that you want to keep in mind. An employee, their schedule is established by the club. An independent contractor sets their own schedule. The employee is expected to follow employee policies and rules, including wearing the uniform, and an independent contractor is only required to adhere to a contractual obligation. So in the contract, the policies and procedures that they have to adhere to has to be spelled out. Now, as an employee, we're required to punch the clock, so to speak. We have to record all of our hours of work. The independent contractor keeps their own schedule. They have to keep record of their hours worked. And as we go down here, they will set their rate for their services. They'll have no overtime or holiday pay. They have no club-covered insurance. They must provide proof of liability insurance. And then the independent contractor becomes responsible for all taxes and receives a 1099 form at the end of the year. They tend to receive their earnings via vendor check, and that's usually set up in the contract, the obligations, whether they'll get it after so many classes, monthly, biweekly, whatever it may be. Our employees, again, at the end of the year, they're going to get a W-2. A club is going to pay a portion of their Social Security taxes, amongst other things. They receive their regular compensation via payroll. They have to be paid overtime and recognized holidays. And the club sets the rate for the services when it's a general employee. Again, really important to know the differences here. When I worked at the Parks, Recreation, and Forestry Department, this was always a bone of contention with many individuals who would come into me. Now, you may own your own business, and maybe you work as an independent contractor somewhere else. The city, when I worked for the city, everyone came through as an employee. They didn't do independent contracting, except in a very few cases. All of my group fitness instructors were employees. I did some independent contracts when it became for a special ballroom dance class with someone from a specific dance studio, but any of my group exercise instructors were employees. I established their schedule. I expected them to follow the policies and procedures. They had to punch in and out. I took care of their taxes. They received their compensation via payroll on a regular basis. The other thing that you are going to want to keep in mind is that oftentimes we'll think it's easier that, oh, well, I'll just hold on to it when their paycheck, so to speak. I'm going to hold on to it for the next 3 weeks, 4 weeks because it was so small. It'll be better when it's bigger. As an employee and as a facility, you have to have that regularly established payroll system. We saw this quite a bit at the Parks, Rec, and Forestry Department. People would forget to turn in their time card or something. I can't not pay them because that's considered withholding pay. And if you have an established protocol with your employees, you still need to follow it. And it's just something to keep in mind as you're setting up your facilities and determining how you're going to do your payroll.